Hi, this is Gaurav from Kuvera and I'm speaking with Prateek who heads passive at Motilal Oswal. So Prateek, let's talk about passive asset allocation funds. Let's start with two parts, right? What is asset allocation? Why is asset allocation important? And how are passive asset allocation funds different than any other asset allocation fund?
Yeah, so personally, being launching a lot of passive funds, I think the biggest question I get from investors that, you launch these, and you launched some 16, 17 funds over the last 2 years, and, most of these funds have very niche audiences and people really want them. But for retail investors looking to, build wealth, I think there's two questions that, I typically ask people: are you aggressive or are you conservative?
Right.
And if you're aggressive, you should go for this one. If you're conservative, you should go for this one. But basically, what asset allocation is an investment style where you want to ideally spread your money over different asset classes, and that's very important.
Don't put all your eggs in the same basket.
Exactly.
Right?
Yeah. So don't put your eggs in one basket or one asset class or one stock. Make sure you're diversified across, say, if you're buying gold or if you're buying international equity or if you're buying debt or Indian equity, I think, or even real estate. It's important to have your money spread, because what we've seen is that in history, these asset classes don't move in the same direction. If you have a market such as this today, last few months, where the markets have been on a downward trajectory, your allocation to gold or your allocation to debt will actually sort of mitigate that risk that comes with equity. So I think it's very important to have an asset allocation as a strategy, and all portfolios should be sort of diversified across asset classes. Passive makes it a very easy decision because you don't have to worry about fund selection. If you're trying to buy say an equity fund or a debt fund, you don't have to figure out or choose between the 5,000, 6,000 funds that you have in the industry. It makes it a lot easier for you to go out there and select it, because what we've seen is, and this is what also data shows, is that if you look at your long-term returns, say 10, 15, 20 years returns, a lot of the decisions that really impact your returns is not really to do with which fund you're buying. Either you're buying this fund or you're that fund. It's really determined by what your asset allocation is. So if you're looking at investing, most of your, unfortunately, most investors tend to focus too much on which fund should I buy. But actually, the biggest decision that's going to make the biggest difference in your life or in your wealth in the next 10, 15 years is about the decision of how much should I allocate to equity, how much should I allocate to debt.
This is the classic position sizing versus
exactly.
what to buy. And position sizing, it turns out, has a lot more impact than what you're actually buying.
Exactly. So that's basically what asset allocation passive funds are, and I think investors now could have options out there that they could invest in these asset allocation funds that do the job for you. You buy this solution and you essentially have a single fund.
It's like a few equity indices.
Yeah.
Throw in an international index, throw in one or two debt indices, and throw in a gold index, and you have somewhat a passive asset allocation. And then depending on if I am an aggressive investor, I'll have 60 to 70% or maybe 80% allocated to the equity indices, while a conservative investor will have 30 to 40%. So it's really simple to understand, and the advantages of doing it in a mutual fund format, and at least what I really like about a lot of these asset allocation funds is that all the rebalancing is tax free.
Yeah.
Because if I can easily replicate this, right? I can go in and buy a few equity indices, I can go in and buy a few debt indices, but then every year or whatever the rebalancing period is, whenever I rebalance, there can be tax incidents.
Absolutely.
Right? But within an AMC structure, that gets taken care of. Fantastic.
Yeah.
Yeah. How do you think? How are you seeing people reacting to a product like this?
No, I think what we've seen is that there has been a lot of, so if you look at these funds, they are typically meant for the retail investors. I think most of the industry, the mutual fund industry is fairly sort of the AUMs or the assets are driven by advisors, by distributors, by wealth management houses, which do personalized asset allocation for their clients.
Right.
So for them, this product may not be meaningful. But for a retail investor, who wants to basically just build out, wants to buy a fund which does everything for them and can customize it for their risk profile, then these could be excellent sort of solution for that sort of problem.
It's like an NPS solution, but it's not in the NPS structure.
Exactly.
It's got gold, it's got debt, it's got equity. It also has international equity, which NPS doesn't have.
Exactly.
But then you kind of like fill it, shut it, forget it, and
Yes.
it kind of keeps on doing its job month after month. Year after
Yes,
month.
yeah.
Fantastic. Thanks, Pradeep. Thanks so much for
Yeah.
speaking with us today.
Thanks, Gaurav.
Perfect.